Rivian initiated overweight today at Morgan Stanley. They call it the one that can challenge Tesla. Adam Jonas, of course, the analyst there. So, Joe, you own Ford. Weiss, you own Porsche and Volkswagen, as people know. Joe, you first, I suppose, on what you think about this one.
Well, first of all, the ownership of Ford is because the valuation is more reasonable. Cathie Wood has not even blessed the valuation on Rivian. So J.P. Morgan, Goldman Sachs, they also put out notes citing the challenges surrounding valuation. Rivian in the long term, yes, it is ultimately going to challenge Tesla because it is introducing the type of vehicle right now that is really not significantly available. You're looking for that last mile fleet. You're looking for the EV pickup truck. I think at some course in the future, yeah, I want to step in. I want to buy a Rivian. I will. I think the company with a 20% stake from Amazon is well positioned. You have to respect valuation and go with something that's more reasonable, like a GM or a Ford.
I mean, it's come down 9% in a week. I know you have such an affinity for buying high and selling higher, Joe, but maybe a 9% pullback is your ticket here.
November 16th, the stock was up at 172. The stock has basically fallen right back to where it was in the days following the IPO. To me, that's not a well-defined, established uptrend that signals you're buying high and at some future point you're selling higher. The course of 1 week doesn't do it for me.
Wall Street brokerages involved in Rivian's IPO are now launching coverage of the stock. And overall, analysts believe that the EV maker is a long-term winner.
So we really think Rivian has a very well thought out business plan to become a large and profitable EV player, has very unique characteristics in terms of both the hardware, the vehicles they're making, as well as like a really strong, well thought out plan on the software side. I think the issue of competition here doesn't apply immediately. The reason for this is electric vehicles are still such a small portion of overall auto sales. Like, I think that they will take share from incumbents, from combustion engine vehicles, with room for a lot of these credible EV players to actually continue growing extremely fast. We're also not looking at similar segments either. As you know, Rivian is starting with a pickup truck, full-size SUV, some delivery vans, but we certainly think there's room for both of them to grow very fast.
It has some strong backing from Amazon. But how many cars or trucks has it actually rolled out and produced? I believe they have very few that are rolled out, and competitors like Lucid as well.
You're correct. The start of production has really only been this quarter, so it's only been a few weeks that they're starting to make those vehicles. Deliveries are going to start also this quarter. Low number of units with some pretty aggressive plan to roll that. The Amazon partnership is actually a really strong feature of the story because Amazon is not only a customer, but is also a 20% owner in the company. And they've already placed an order for 100,000 last mile delivery van. This also is a truck that has been designed together with Amazon. So it really fits very much the need of this last mile delivery. And even the software, the fleet management has been, designed together with Amazon and provides some really attractive features that could be used by Amazon on all its vans eventually, and then potentially by other fleet companies as well. In terms of execution, they need to produce on time and on quality, and they're really just at the beginning of it. But in terms of the outlook, they already have a very strong order book and an extremely dedicated, strong partner.
And I want to talk for a minute about their hardware, sort of the hardware side of the business at Rivian. How much of a game changer is that? And how important is it for this company to grab a bunch of market share?
Their architecture is fully flexible. Essentially, they've designed one, that skateboard, which could support essentially all types of vehicles, small, mid-size, large-size, luxury, mid-end. It's really all supported of the same platform. Rivian plans to launch 2 to 3 new vehicles every year at an extremely rapid cadence. They're right now in the process of actually starting production from scratch with 3 models at the same time, which is not something that has really been done before. I think the advantage of it is really on the market share. You do not have to make heroic gains in terms of market share in any given segment, but this is really something that they were able to essentially observe all the other EV startups and learn from their mistakes.
One of the notes caught my eye because it was basically using 2030 estimates to justify these price targets. I don't know if that was yours.
We obviously have to forecast a little bit further out here for companies like Rivian, where there's a great growth story. They're starting from nothing. They're ramping right now. We think that the ramp path they are on can actually be faster than what Tesla has accomplished at a myriad of different valuation metrics, including a 2025 sales target, as well as 2030 EBITDA and a 10-year DCF.
You know, if we look at the case of Tesla, it did take them a decade to basically, IPO and then reach the kind of scale that they're at now. So from that point of view, it totally makes sense. What was your make of the information's piece that Amazon had concerns about Rivian's batteries?
All electric vehicles might not fare as well in colder weather. I would assume that this is something that the company and Amazon are both well aware of and working to mitigate. Amazon mostly has test vehicles now, and they don't necessarily have the final vehicles or the final battery pack and the final software configurations in the vehicles. To the contrary, I think Amazon's involvement in the story, both from an ownership perspective, but more importantly from a customer perspective, is very important here, because Rivian is really going to help Amazon try to decarbonize that last mile. Amazon's last mile fleet is growing, and it has to go from 100% ICE to 100% electric.
For deliveries, you're talking kind of about 1.25 million in 2030. How would that stack up against what Ford is likely to do, what Tesla is likely to be doing by that date?
That's about 1% global share total. And then using our electric vehicle forecast, we think that'll be about 4% battery electric vehicle share. If you look at the Rivian plan here, right, initially, and what we really like about the story is Rivian has great product. We think the R1T is an exciting vehicle. The R1S, when it becomes available, I think instantly moves to the top of 3-row electric SUVs. We've seen this work in other industries, such as like a Patagonia or a Yeti, but certainly even in automotive with Jeep, right? If you look around, there's a lot of families driving around in Jeep vehicles, and we think Rivian is positioned a brand to capitalize off that market.
We got a hat trick of EV companies this morning because we got to talk about Rivian. One of those that stands out to me, though, JP Morgan actually rating it a neutral, and valuation is the reason, which makes sense.
Valuation doesn't matter. Rivian hasn't made any cars yet for the most part. Not making any money anytime soon. Let's just slap buy ratings on this. Rivian shares down 40% from the high hit on November 16th. From an unproven company in a broader market that is under a lot of pressure here. The note out of Deutsche Bank, they are initiating with a buy rating, $130 price target. On Amazon, I believe, owns 20% of the company. They have contracted with Rivian to get them 100,000 electric vehicles by 2024. That investment seen as a backstop to the stock price.
Yeah, and all these represent, by the way, all these price targets for the most part represent upside potential from where the stock is trading currently at about $101. That is all after the precipitous drop that we had seen in Rivian shares after Ford said they were not going to work together. Of course, on one hand, that argues that, well, the traditional OEMs maybe don't have enough faith in what Rivian's trying to do. But on the other hand, maybe that gives them the space to try to grow whatever they want without the shackles of whatever the production capacities or whatever it was that Ford, when it comes to what Wall Street is trying to do in trying to figure out what a proper price target is for this company, which again has not been public for very long. The question is really going to be, how do you provide any sort of financial modeling when a company that had $1 billion with a B, $1 billion in losses in 2020, you cannot do that with this type of company. But for that matter, I guess you can't do that with many of the other unicorns. I guess it just goes to show that these types of initial price targets might be a little bit more speculative and kind of not as substantial of coverage for other types of companies, let's say in the 2010s. But again, maybe that's just the era that we live in today.